Hello, family. Thank you for rocking with me on a Friday evening. I definitely appreciate you. I am Sir Ashley, and this is my channel. On my channel, we talk about money, real estate, and personal finance. So, if you have any questions regarding any of those, feel free to leave them in the comment section below. In today's video, I want to talk about facts regarding the housing market. Now, there's a lot of conjecture, a lot of opinion as far as what's going on in the housing market. But today, I only want to talk about facts. So I have about six or eight facts that I want to go over with you. And this is part of a series. I'm going live tonight. I'm going to have a guest for you on Sunday. And I'm also going to have a guest for you on Monday and hopefully on Tuesday. And we're going to talk about today the facts. On Sunday, we're going to talk about how to capitalize on the current fact that we're dealing with right now. And then Monday, the do's and don'ts. And then Tuesday, that's up in the air. Now, I wanted to come to you often because I know that I have been negligent, shall I say, in providing you content consistently. I've been in the middle of moving. I believe I am pretty much settled in now. So I want to provide you with valuable content, or at least what I hope would be valuable content. Hello, Cameron. Thank you for joining. Hello, Craig from Mint Hill. Thank you. Thank you. If you have any questions, feel free to leave them in the comment section. I will be getting to them later on. But again, I want to talk about 6 or 8 facts about the current real estate market. So let's jump right in. Fact number 1 is that mortgage rates today are significantly higher than they were just in January. Now, I know that's not news to you, but it is a fact that we must deal with. Today, the average mortgage rate is, give me 1 second. The average mortgage rate is 5.41%. Now that's, give me 1 second, that's paying 0.4 in points. So you're actually paying money to get that rate. Now that rate this is a national average. Now, if you talk to your individual lenders, you might have, or mortgage brokers, you might have something lower, you might have something higher, but that's the national average for your people with A1 credit. And so if you have some blemishes on your credit report and everything, you will see a rate higher than that. I've seen people with rates in the 7s recently. I know, in the 7s. It's almost 8 actually. So if you have A1 credit, that is where your rate is, and you're actually paying money to get that rate right now. Now, back in, give me 1 second, let me try to pull it up. Back earlier this year, the rate was actually, I don't have that slide with me, so we're going to disregard it. Earlier this year, in January, the rates were on average 3.22 in January. So in less than 5 months, we've gone up over 200 basis points. We've gone over 2 percentage points in your rate. Now, if you haven't checked out the live stream from last week, I had Ortez on. Now, Ortez is a trusted professional that I go to, I talk to, we at least text daily, if not actually have a phone conversation daily, and just picking each other's brain. And I go to him for advice, he comes to me for advice. And we went through a scenario of what mortgage payments were back when the interest rates were 3%, 4%, 5%, and then also what it will be at 6%. So if you have not checked out that video, please go ahead and check that one out. It's from last week. I believe the title was Desperation Everywhere, sellers being desperate, buyers being desperate, and stock market investors being desperate as well. Hello, thank you all for joining. I appreciate you. If you're here, leave a comment. Let me know where you're from. And if you have a question, please feel free to ask it. But I have to say, please put a Q in front of it so I know that it's a question and not a statement. Hey, Dolly, how you doing? Uh, Cameron, I said hello to you. Kay's perspective, hello, hello. I appreciate you. E. Edwards, yes, they are predicting another Fed fund rate raise. Wow, say that fast 3 times. Fed fund rate raise on May 4th to be another 50-point basis. So that just means the federal funds rate, which does not mean that your interest rate for your mortgage will automatically go up 50 basis points, but it is more than likely that it will impact your mortgage interest rate. So not only are they saying in May they're going to raise it 50 basis points, the federal funds rate, but also it's looking like another 50 basis points in June. Now, stay tuned. A lot can happen. I don't have to tell you. The past 2.5 years have been absolutely crazy. We can't predict what's going to happen, but that is what it's looking like. 50 basis points in May. You're correct, Edwards, E. Edwards, and then another 50 basis point raise in June. Hello, everyone. Hello, Rose from New York. Yes, viewing from Charlotte. Hey, welcome, welcome. And so, Craig, five a 5% interest rate is not that high. I mean, compared to last year, it's double, right? But in historically speaking and perspective, a 5 is not high. A 6 is not. 6 is getting there, but if in the fives, you're still historically low. Again, if we compare it to the last 2 years, it seems insane because we've doubled it, and that's why I've been telling people, anybody that listen, to buy, take advantage of those low rates because it's all about affordability. If you can secure a home, yes, you might be paying more than the asking price, but if you can secure a home and lock in your payment for 30 years, you can't beat that. So the first thing I want to talk about is, well, I mentioned already, interest rates are significantly higher today than it was just back in January. That's fact number one. Fact number two is that we still have very, very, very low inventory. Now, not the record inventory. I do have a slide for this. Give me 1 second. Not the record low inventory that we had in January of this year and in February of this year. And you see it picked up in March. And I look at houses coming to the market and the inventory for Charlotte and Raleigh and some of the Triad area. Now, granted, that's just North Carolina, and I also look at some South Carolina as well. But we see that inventory has been picking up. But just looking at the chart, you'll see that it is picking up. But when you put it in perspective, when you put all of that in perspective, you will see that while it is picking up, where you have almost 1 million homes for sale in March, and I believe we will have over 1 million once the numbers come in for April, we're still not even near where it was in July of 2021, where there was 1.31 million homes for sale. And people were complaining about inventory being tight then. Well, we have significantly less, 400,000 less homes now. Let's take it back out. So if we look at, well, I got to pay. I don't have Y charts. Okay. So, but if we look at it historically, you will see that inventory was tight even in 2020 and 2021. It just got much, much tighter, much more restrictive as we went into 2022. Quick question from AA. How long can you lock rate? I know some lenders that you can rate lock for up to 360 days. Now, is that advisable? No, but you can. I mean, if you want security, you can lock it in for that long. Now you're paying a crazy interest rate at that point. I believe, because I had somebody quoted yesterday for a rate lock until the end of the year. and it was about 3% higher than what it is right now. So it was in the eights for him. So at that point, I mean, and you're paying money to do so. You're paying anywhere from $6,000 to $8,000 to lock in your interest rate at an eight. So I don't advise doing that, but you have to do the numbers for yourself. Actually, Mr. 613 USC, we're actually going to talk about arms on, I believe it is on Tuesday when I have Dan Frio on the channel. He's going to talk about arms. I have talked about it in recent videos. Um, Personally, I don't believe they are for the average person, the first time home buyer. I could, I do not recommend you getting an arm, and I will go into that in depth on Tuesday. So first thing, that's a fact. Mortgage rates are much higher. Second thing, we still have crazy low inventory. Now, inventory is picking up a little bit, but it's still very, very low compared to history. The next thing I want to talk about is pricing continuing to go up. Now, if you're in the market to buy a home, I don't have to tell you. If it's a new construction, you know that prices will go up it seems like every single week after about 2 to 3 sales. And um, what you could buy right now for $400,000, at least in the Charlotte area, is not. It's a little depressing actually. I'm not gonna lie. What you can buy for $400,000 today is minuscule for what you could have bought 3 years ago for $400,000. So prices are going up. Hello, hey, what's going on from Quebec? Wow, Quebec, Canada's watching. I know I have people in Montreal that some clients from Montreal area that watch and actually helping them move to the Charlotte area. So thank you, Howard. Let me put this question on here. Howard, is the real estate rush a bubble that's going to pop sometime in the near future? Um, so what I believe, I want to talk facts right now. Facts. So there has been a rush in February and March. You saw a rush of consumers that were on the fence rushing to buy. Why were they doing so? Because they saw the interest rates going up. And I can attest, I was one of those buyers. People ask, would you buy a home in this market right now? Yes, I recently bought a home in this market. So I understand what you're going through. I understand your pain. I can empathize um, because I just went through it. So yes, there has been a rush because of the interest rates. People were fearful and didn't like them going up, so they were on the fence. They're like, "Hey, let me go ahead and buy something real quick." So long as it checks off all your boxes and you plan on being there for a significant amount of time, and it's a good decision for you and your family, I say go for it. You just always have to weigh cost of buying versus cost of rent, and your situation is different from every other's. So we talked about prices going up. The next fact I want to talk about is, let me take this off the screen, is how affordability is coming down. With the rise in interest rates and the continued rise in prices, housing affordability has really gotten worse. Um, I read something recently that said housing was most affordable. Now, it might not seem this way to a lot of people, but it was most affordable in the past 20 years, in late 2021. I'm sorry, late 2020, and in all of 2021 because of the interest rates. Yes, prices were going up. Excuse me. But the interest rates were at 2, 3%. So it evened everything out. And wages did increase as well. So housing affordability for buying a home, not rent, was the most affordable in those years in the past 20 years. Now, I know that everybody wasn't feeling that, but statistically speaking, that's the truth. That's a fact. So, with affordability becoming a major problem. Hello, hey, how you doing from Minnesota, Sherry? It will be very interesting on what happens to the housing market. Now, this I don't want to talk about. I don't want to surmise and everything in this video. That's future live streams in the coming week. But affordability has eroded. Now, it is not the most unaffordable market we've been in the past 20 years, but affordability has taken a huge hit in just the past 6 months. Because while people have gotten raises, you've seen interest rates almost double. Well, not double, but go up over 200 basis points. And you've seen home prices continue to climb. Now, another fact that I don't even have on this list, but I want to give to you is that you have seen a lot of price declines, a lot of sellers dropping the price on their home recently. And while I don't know every seller situation, I can say that what I've seen is that those sellers were overpriced to begin with. I believe they got greedy, listed their home for some astronomical number, and thought they were going to hoped and pretty confident based on the market the past 2 years that they were going to get that number. Well, reality set in, coupled with interest rates rising, which impacted people's buying power. They had to reduce the price to what it should have been originally. So, caution to all you sellers, if you want to sell your home, properties priced correctly when they first hit the market garner a lot of attention, a lot of eyeballs, a lot of offers, and people compete, and then that drives your price up, as opposed to you coming out the gate shooting for the stars and scaring everyone away, and nobody's making a bid on your property. So you have two different strategies of thought. Um, I say price it correctly. Actually, I priced a home today. I listed a home. It needed some work, older home, and I priced it correctly. And within the first 5 hours, we had about 7 offers. I had somebody call at what? It's 7:33 right now. So called about 6 o'clock. Look at my phone. And he's like, "Did I miss it yet?" Because he knew that it was priced correct, and he knew that it was an investor. He knew that there was going to be multiple offers on it, and there was. And we're going to go under contract on that very, very soon. So for you sellers out there, that's a word of advice. Price your property correctly the first time, as opposed to chasing the market back down. I want to take this quick question because I have a lot of VA clients or people reaching out that have VA loans, and um, my brother served in the military, so I want to thank you for your service and also answer your question. Are VA loans being impacted by the rising rates? Yes, I mean all loans are being impacted by the rising rates. You're just paying more in mortgage, but what I have seen, and I'm going to get to this point, that's one of these facts later on, is that as the rates increase, it's a fact that a lot of buyers that were in the market 2 months ago, 3 months ago, are no longer in the market to buy because they can't afford it. If you're in a position to where you can afford it and you have a VA loan, before your offer may not have been looked at favorably because they might have had a lot of cash offers or conventional offers. Well, a lot of those buyers have sat down, taken a seat, taken a break from looking, and if you're still in the market, that just means there's more opportunity for you. So I believe your time will come, VA buyers. Just be patient. Actually, I was talking to my neighbor. Uh, well, their daughter's fiance, so future son-in-law, is a veteran, VA loan, and he kept missing out on properties. Excuse me, because Nobody wanted to. VA loans have a bad connotation. People think they take longer than normal loans, when in actuality, they don't. But that's just what was being fed to the market and to real estate agents. So long as you have a good lender, good mortgage broker, and everything, good team, you can get VA loans done in just as quick a time as you can get a conventional loan done. But your time will come. Be patient, because a lot of with these rising rates, a lot of other buyers are going to the wayside, which leaves more opportunity for you VA buyers. If you have any questions, please feel free to ask them. Only thing I ask is that you put a Q in front of it so I know that it's a question, because I have a few comments in here and I want to make sure that I answer your questions. The next thing I want to get to is it's more of it's a fact, but I want you to be cautious. And then we touched on it a little bit, and even with we touched on it a little earlier in this video. As interest rates increase, you will see lenders and mortgage brokers get more aggressive and more creative in their loan types. Now, I'm not sure if you've been following, but a lot of mortgage brokers and the mortgage industry is taking a hit right now as these interest rates increase. Why? Because that means there's less buyers, less business, less transactions. And better.com, a huge mortgage company, actually just came to Charlotte as for headquarters, laid off thousands of people in the last couple months. You had Wells Fargo lay off thousands of people in just the past month. I think it was a couple weeks ago in their mortgage industry. And there was another company I can't think of right now. Rocket Mortgage, I know, laid off a lot of people. So if we've seen that there has been a lot of layoffs in the mortgage and turnover in the mortgage industry. So as there's less people able to qualify for a traditional conventional loan, you will see more creative stuff such as ARMs. ARMs are adjustable rate mortgages. Now, I'm not saying they're good, I'm not saying they're bad. Everything in moderation can be good. You just have to know what you're getting into and go into it with your eyes wide open. My personal advice and what I believe is that the average first time homebuyer should not get an ARM. ARMs, I believe, should be relegated to if you are knowledgeable regarding the real estate industry, if you are a second time, third time home buyer, and if you already have a plan on what your game plan is. Me, when I purchase anything, or when I do anything, I always have the end in mind. A lot of people start something but don't know exactly how they're going to dispose of it or how it's going to end. With an ARM, you have to know what you're going to do. So an ARM is you have one mortgage rate for a set period of time. It could be 2 years, could be 5 years, could be 7 years. And then at that time, your rate increases after that, whatever that first initial interest rate is. So your payment could be very, very affordable for that first 2 years. But then after 2 years, your mortgage payment, this is what got a lot of people in trouble in 07, 08, your mortgage payment could literally double. And if you did not go into that situation with your exit strategy already planned out, you're going to be on the hook for that. So I want you to just be aware. If you're going to get an ARM, if you look into it, be aware of what you're getting into. Now, ARMs could be very attractive. We just saw that mortgage rates right now are, let me stop sharing that. Yeah, they're 5.41%. Now, an ARM, what they end up doing is they give you a nice introductory rate for a set period of time. I've seen ARMs to where the normal rate is 5.41. I've seen ARMs at 4.2. So you have over a point difference with an arm. So it makes it very attractive for you to be able to qualify and get into your home. But you have to know what the repercussions are later on. So just be careful. I have to take a break and shout out Matt. Matt, he actually reaches out to me. We chat occasionally. Thank you for coming on the channel and just being supportive. I greatly appreciate you. Thank you. Yes, yes, seeing a lot of return and interest only loans as well. Now, I have seen that as well. Even in the I'm an investor as well. So even in the investor space, I've seen something which I really liked, I'm not going to lie, is a 40-year loan, the first 10 years interest only. Now, this is not for owner occupied properties, but even for owner occupied properties, you do see a lot of interest only loans. Just be careful. Just be careful. If you're not wise or know what you're doing, you can find yourself in big trouble. Real quick, I got to shout out Javier. He is, if you are interested in real estate, want to learn real estate, go check out his channel. I consider him a YouTube OG. He's been doing this for quite some time, and I love his style and just relaxed demeanor. So I appreciate the super chat. Thank you very much, brother. Um, the next topic I want to talk about next thing I want to talk about that's a fact. Just talking about facts today is millennials. A lot of people, I'm gonna get to the fact, but it's just concerning millennials. There's a lot of conjecture and people saying millennials aren't buying homes. They're not buying, they can't afford it. That's not true. Last year, millennials was the largest subsection of buyers in the market. Millennials, I'm an older millennial. Millennials made up in 2021 37% of all home buyers. So the talking point that millennials can't afford or living in their mother's basement and not buying, that's not the case. I just told you I just bought a home. And I know I'm not all millennials, but 37% of all home buyers last year was millennials. They made the largest subsection, larger than baby boomers, larger than Gen Xers, millennials, largest subsection of home buyers. And this year they're on pace to representing 43% of all home purchases. So millennials are buying homes. And if you are a millennial that want to buy a home and trying to figure out how to position yourself, please reach out to myself, reach out to my team, and subscribe to and learn and subscribe to channels like Javier's, my girl Shahida Hill, to get you to close confidently. I know that's your trademark, Shahida. Do not dock me. But that's my sister. I love her to death. Go check their channels out, and they both provide excellent, valuable information regarding the home buying process and how to position yourself. Along with my channel, I believe you can never be over educated regarding what you want to get into, but you have to be cautious to not allow all that information you take in to allow you to be paralyzed and not act, where you have analysis paralysis, to where you just have so much information. You're like, what to do, what to do. Yes, learn, but then take what you've learned and put it into action. Now, this is true. Ms. Shadow, yes, the student loan pause has allowed a lot of millennials to save and buy homes. That is, yes, I 100% agree with that. So it'll be interesting to see what's going on, what's going to happen with the student loan payment, and and how that's going to play out, and forgiveness and everything. So just I'll be looking out for that. I have student loans for law school, so I'll be looking out for that. That is the 6 or 8 facts I wanted to talk about today. So if you have any questions, please, I'm about to go through the comments and see if I missed any questions. Please ask away. But again, I just wanted to use today as the preface for the next coming live streams on Sunday. Be sure to subscribe, share this video because I'm going to have a live stream on Sunday with Kina. She's a mortgage broker here in Charlotte, with Joy Bailey on Monday, and with Dan Frio on Tuesday. And we're going to talk about the market and the different aspects of it. But today I wanted to just touch on facts because a lot of people, a lot of YouTube channels try to, they propagate a lot of fear. They feed on your emotion, as far as being fearful and not wanting to move forward and act in buying a home. Now, I want you to do what's best for you and your family. I believe that getting on the property ladder, wherever that may be, meaning owning a home, buying a home, is one of the best things you can do, not only for you, but for your family and your legacy. I haven't really, on my channel, I haven't really talked about my history and where I come from. I'll get into it eventually. Um, but just because I practiced law, went to law school and everything like that, mortgage broker and all that, that is, I'm fortunate. I am very fortunate to be where I am right now. And I believe and know, just based on my own experience, that real estate is life changing, what you can do with it. So if you look at your finances and it is comparable, your rent payment and owning a mortgage, having a mortgage is comparable, I say just go ahead and get a mortgage. Yes, you have to plan, prepare for the down payment and and that cost, that is a significant cost. I don't want to downplay that, but if you have a goal, write it down, take the necessary steps to make your goal a reality. And that's my advice to you. Um, don't get discouraged, don't get dissuaded by all these channels that are fear mongering, talking about or have you waiting for a housing crash. I just showed you that housing inventory is still very, very, very low, extremely low. And the way our America works is supply and demand. So long as there is more demand than there is supply, prices will continue to go up. And those same channels that were predicting a real estate crash since 2020, telling you not to act, don't buy. Look at where, and if you did not do so, that has cost you over for in certain metros across the country. That decision has cost you over $1,000. I mean, $100,000. You've missed out on just about 30 to 40% equity by not buying in 2020 because you were thinking a crash was coming, and then 2021 came. The same people were talking about a crash. They showed graphs, good pictures and everything, but that crash didn't happen. So I tell you, stop trying to time the market and get on the property ladder, because the real way to not just wealth but freedom, financial freedom, is in my opinion through property ownership. And the longer you hold on to it, the more equity you'll get just by paying down the mortgage balance, but then also being able to take advantage of inflation and everything going up. I hope this was helpful. I didn't want to spend too much of your Friday evening, take up too much of your Friday evening. Just know I appreciate you. I'm thankful for you rocking with me and supporting the channel. I know it's been hit or miss the past month, so I want to be of service to you. If you have any questions, leave them in the comment section. I will be hanging out down there for the rest of the evening and throughout the weekend. But feel free, subscribe, leave a comment, and be on the lookout for the future live streams, the several live streams I'll have Sunday, Monday, and Tuesday. I'm Sir Ashley. I'll talk to you soon.